Considerations for working part-time in retirement. Hi, I'm Dave Grant. I'm a certified financial planner and the founder of Retirement Matters, a financial planning company based in Barrington, Illinois. Since the recession of 08-09, the number of retirees working part-time in retirement has risen dramatically. Faced with smaller 401k plans and the prospect of increasing retirement costs over their longer lifespan, many retirees were left with no other choice. But even as 401k plans are recovering, many retirees are simply not willing to trade in a lifetime of work for a new lifetime of leisure. Whether it's a fear of boredom or a desire to maintain their wellness, a majority of retirees are opting to continue working, at least on a part-time basis. However, working in retirement can create some complications which could end up costing you more than it's worth. Now let's take a quick look at some of these complications. Working in retirement can raise your taxes. A big mistake many working retirees make is not understanding how the extra income will impact their tax situation. So retirees who receive pension benefits or who start taking withdrawals from a defined contribution plan, like a 401k, could easily find themselves in a higher tax bracket once they start receiving earned income from their part-time job. Some retirees may try and get around that tax increase by delaying withdrawals from their defined contribution plans. While it may seem like a good idea to delay withdrawals from a 401k or IRA while you're earning income, it increases the likelihood you're going to be forced to withdraw more than you need when the required minimum distribution, or the RMD, kicks in. RMD rules require that you begin taking withdrawals at a minimum rate when you turn 70 and a half. If you take out less than this required amount, you're not only going to pay taxes on the amount that's not withdrawn, but you're also going to pay a 50% penalty. Higher capital gains tax. Now, you could also end up paying a higher capital gains tax rate if you're working in retirement. If you're in the 10 to 15% tax bracket, you pay 0% in capital gains tax. But if your additional income bumps you up to a 25% tax bracket or higher, you're going to pay 15% capital gains tax. This is going to be especially problematic if you rely on the sale of your assets for your income. It also impacts Social Security benefits. So if you're receiving these Social Security benefits while you're working in a part-time job after your retirement, a portion of these benefits could be taxed. The IRS combines your income from a number of sources, including earnings, dividends, capital gains, retirement account withdrawals, as well as 50% of your Social Security benefits to determine the taxable portion of those Social Security benefits. For a married couple filing jointly, a combined income from those sources of around $32,000 or more leads to 85% of those Social Security benefits being subject to income tax. Now, another issue when it comes to Social Security is, although you're allowed to receive Social Security benefits while you are working, depending on your age and the amount you earn, you could lose some of your benefits. If you retire before your full retirement age, your benefits will be reduced by as much as 30%, depending on when you were born. In addition, if you earn more than a certain amount, $1 in the benefit payments will be deducted for every $2 you earn from your job above an annual limit. In 2017, the annual earnings limit is just under $17,000. Now, after your full retirement age, which is typically 66 or 67 for most people, you can earn as much as you want and your benefits will not be reduced. So there is a big decision that needs to be made as to when you start collecting benefits if you're working part-time. So there are a number of planning steps you can take to avoid these pitfalls. For example, knowing your tax situation before you start working, when to start taking Social Security benefits, and the best time to start taking retirement withdrawals from your 401k or other retirement plans. Now, your financial planner, and if you don't have one, I'm one, is best positioned to help you understand the impact of your part-time work and how it can impact your retirement income from all sources. It's best to understand these things if you want to make informed decisions each step in your retirement.